right. Hello and welcome. It is the Reverend Fancy Yancey Financial Capital Church Fund. And tonight is your August 23rd, 2018 market recap. Today was an interesting day. More of the emerging markets implosion. Oh, and as Zero Hedge puts it, emerging market massacre continues. Here we have probably some leftists. I'm not sure, but they look like it. We are broadcasting live from Cary, North Carolina, just outside of Raleigh. And they have quite the nice video here. Just when you thought it was safe. I don't know what that by the fucking retard ties. I don't know. EM implodes. I don't know what that stands for. But so emerging markets implodes. Oh, explodes. U.S. macro dumps. Oh, and we're going to get into the U.S. micro cap too, because there was a nice article on that one. And China resumes its devaluation. Now let's watch the clip. Naked Gun is always good. I hope this is an NBC Universal clip too. Fuck those assholes. Yep, there's nothing to see here. Equities are fine. Yeah. The price discovery destroyers did their job. Equities are just fine. Hanging on. I guess it's not working. Anyway, let's go through the charts here. Here's the yuan plotted against the S&P. Ooh. See, I was just going over an article written by Jim Rickards, author of Currency Wars, a case for gold, a new case for gold, and the most recent one, The Road to Ruin. And he was talking about the Chinese implosion. Chinese aren't going to implode, at least in my opinion. I'll go over that later. They'll see some slowdown, just like everybody else, but everybody's already been slowing down. And here's part of it. Here's a nice little chart. Last couple of days, this is them devaluing. But what I was saying in regards to that was that China's credit, the world depends on it, especially America. And if Chinese credit implodes, so does American credit. That was a key fact that I would just add to his article. I wasn't completely disagreeing with it, but there was just one important point there that was not covered, where suppose Chinese credit did implode, well, so does the United States. And here's a nice chart that shows it. Here you have the yuan plotted against the S&P, and you can actually see it follows it pretty closely. Pretty nice correlation there. And now, look what's happening. Yuan is devaluing, and if we went for PDD, PBT, whatever you want to call it, I call it the price discovery destroyers. Some people call it an employment protection team. I think the official term for them is the President's Working Group on Financial Markets or Capital Markets. But that was established in the Reagan era, and since then, they're basically a trading desk with unlimited printed dollars that props up anything they think should be propped up. And apparently people think that's a conspiracy theory, even though, there's papers that show they exist. There's people that used to work on it that says it exists and describes exactly what they do. And I'm sure you could also see that, how it works with all the major banks. In any case, this isn't a conspiracy theory show. This is a market show, and this is what we have today. Pretty nice, interesting there. I'm pretty sure that S&P will follow it somewhat closely, up to the point that PDD allows it to. And now we have the nice little decoupling with the S&P there and the 30-year yield. Now the equity markets, where price discovery does not exist, may be buying it, but the bond markets are not Absolutely not. And there's a nice little implosion there at the yield curve, at the 2 and 10 spread there. Just collapsing, just gone. Whoa, where did it go? It's not there anymore. Just getting tighter and tighter. And here's a nice little chart showing the S&P plotted against the Bloomberg Commodity Index. Now, so there's a lot of things that would go into that. It's not as simple as the other ones. The commodities prices. For example, you got the trade wars going on. You got the issue with the dollar going on. You got global economic implosion going on. Both in the currency and the debt. So, but yeah, S&P is going where it wants to go because of no price discovery. And the PDD team. And here's a funny one. This is a good one. The rest of the world is reflecting, for example, there's a commodity index. It's reflecting the imploding yield curve. It's going the same path basically as the 30-year yield there. Now, for some reason, just U.S. equities are somehow immune to it. How did that happen? Let's see. Again, the PDD, the price discovery destroyers. Then, of course, you have the central bank action. I was mentioning the sovereign wealth funds, too. I guess the Norwegian sovereign wealth fund, technically, I guess their central bank is printing money to buy U.S. equities. The Swiss National Bank buys U.S. equities. Other sovereign wealth funds, pile in there, too. And the way I would describe it, of course, it's, a bubble. But the way to think about it is that there's no more price discovery. Nobody, and we're going to go over a very nice article that kind of just, makes fun of it. Where, nobody's taking a look at any of this and says, this is what this should cost. They now base it on, what can I sell it to somebody else for? Which is, exactly what a bubble is. You have nothing to do with the fundamentals. You just guess what you can sell it and hope that you can sell it to somebody else for more than you bought it. But eventually that ends, just like the housing bubble and any other bubble in history, including the tulip bubble several hundred years ago in the Netherlands. So, again, the S&P is up, and for some reason, the rest of the world is not. Yeah, because they don't have that favorable bubble. I guess favorable should not be the word. Bubble should be the word. And manipulated, prices. And here's a good one. This has to be a good one. EM tech stocks and U.S. tech stocks. Yeah, that gets really interesting. But here's the funny part. That article I'm about to drop next describes exactly the same issue in U.S. stocks. Or it describes an issue in U.S. stocks, or U.S. equities, especially tech equities. Oh, no, they weren't even tech equities. In U.S. equities, that's the same problem in the emerging markets equities. Emerging market equities should be imploding because none of these people can now pay any of their debt back. And somebody wrote a nice piece on Turkey earlier that Zero Hedge posted, where, and that one went along with the that little quick indicator of, or what's this saying? The country with the biggest skyscraper usually implodes the next country with the latest biggest skyscraper implodes next. I forget what the saying is. It goes something like that. And basically, in Turkey they had a nice real estate boom. nice construction boom, especially because one of the big construction company was Erdogan's relative. But we gotta verify with YouTube, I guess. Alright, so I was just uploading last night's market recap. But back to what I was saying. So they had a nice real estate boom fueled with credit. Credit denominated in US dollars, probably about 90% of it, 95%. And now they cannot pay it back. So that's why EM's imploding. But, somebody points out some very nice, interesting things in the U.S. equities markets. And for the same reason, they should be imploding, because of debt. And we'll go over that in a few minutes. But, for some reason, price discovery does not exist. And again, you can thank several factors in that. You can thank the PDD when anything actually goes down. No corrections allowed. Or you can thank just cheap money flowing in there. Or I guess even funds thinking they're going to get higher returns in the equity bubble than they ever would at, even at the 3% 30-year. Which again, yeah, that's nothing. 3% is nothing. And why the Fed will continue to raise rates. But that's another topic. So you have also the other central banks of the world buying the U.S. equities. No matter what the price is. No matter what the valuation is. So, there's no price discovery. At least yet. Because when the run on debt goes, that'll quickly follow. So, nice macro surprise index. Again, S&P just doing what it's doing. Does not care. And then finally, and most importantly, the central bank balance sheets and the U.S. equities. I think he did it with the G4 banks. He probably should have done it with the G7 or G10. But even this shows, wow, it goes right up there with the balance sheets, with the money printing. And of course, China has their own version of the PDD, even though they're not as they don't interfere in their markets as much as the United States, which is quite laughable. They have freer markets than we do. Hard to believe Communist China has freer markets than the United States. But that's the world you live in. And yeah, he goes over small caps here. Managed a record high, and we're going to go over that in a second, before tumbling. NASDAQ broke its 5-day win streak. Cash equities tumbled into the European close. Tracker tried to stage the normal momentum ignited rally, then dumped at the close. Yep, see, you can see the PPT in action there, or PDD. That's exactly what that is, and you can even expect it to, at this point. But futures show the chaos better, apparently. Oh, the Australian dollar took a dump today. Ooh, politics. Yeah. And showing it there. Then you also have, Korea's the machines causing it. And then, let's see what's going on here. What's going on here? Oh, the VIX is up a little bit. Huh, not shocked. The S&P was failing to make higher highs and extending its record high breakout gains. And it is a tough day for China Tech. Bob released earnings. Ooh. Yeah, it's just, just all markets in general. Let's see here. Treasury yields mixed with the long end lower and the short end higher. The lagging indicator is now imploding. That yield curve is flattening. It's a lagging indicator at this point. But I think it's still worth, taking a look at. Still worth talking about. And the spread's tightening down to 20 basis points. Wow. Interesting. And the 30-year dropped to 5-week lows. People are still running from those emerging markets. And I'm not sure what's going on with the dollar here. Bounced overnight. And emerging markets still imploded. Or if they continue to implode, I guess. Probably due to the Fed minutes. Oh, yeah, they're going to keep raising rates. They don't have a fucking choice. But back to the bloodbath. Emerging markets were clubbed like a baby seal, with all EMFX lower. And who took the biggest drop today? Ooh, South African Rand. Now, you can't make that shit up. That is the funniest thing I have ever seen in my fucking life. I'm not exaggerating there. For them to redistribute and just create a tidal wave of defaults is unbelievable. Like, you can't make that shit up. You're even telling them what's going to happen to it. They're still going to do it. They're still going to do it. I'm sure they can give two shits. And they probably do. They probably just say, China, bail me out. I'll take the petro yuan. Or I'll pay for the petro yuan. I mean, just, whatever. But it's got to be the funniest thing on earth. Even worth making a movie about, because it's that entertaining. And then the Brazilian real took another dump on top of the structural problems. I'm not sure what's going on with the Lula there, but we'll go over that. I saw an article about it. Peso taking another, toilet paper trip there. Again, that's again structural problems, probably coupled with some of the trade, whatever. But that should not be hard to figure out. Put it in the wrong account. Delete this. God damn. Uploading last night's video onto the YouTubes for your viewing pleasure. Let's see here. Pause this for a second.